Hey listeners, today we had on Rebecca Rettig, the new Chief Legal Officer at Jito Labs. Jito is a really important group of developers for Solana. It made MEV modifications to Solana's validator software, and the Jito Solana client now accounts for more than 91% of Solana's stake. Now with Rebecca on board, Jito is getting involved in policy as well. The team just met with the SEC to talk about ETFs and staking. We chat about that and much more on the policy/regulatory side of things for Solana. This is a good one. Let's get into it. Digital Asset Summit in New York is right around the corner. Some of the biggest names in crypto and several major institutions are going to be there. There's a lot of noise in crypto right now, and I think this conference will be pretty high signal. We're doing a live Lightspeed taping with Solana's co-founder Anatoly and Kyle from early Solana investor Multicoin Capital, so you won't want to miss that either. I hope to see you all there, and you can use the code Lightspeed10 for 10% off tickets at checkout. Hello and welcome back to another episode of Lightspeed. I'm your host, Jack Hubenek, and we're joined today by Rebecca Rettig, the newly tapped Chief Legal Officer at Jito, someone very respected in crypto in general. Rebecca, thanks for coming on Lightspeed.
Thanks so much for having me. It's exciting to be here.
Yeah, so you are fresh off a trip to DC with Jito. How was that?
It was great. It's definitely something that I think Lucas, who's the CEO of Jito Labs, is interested in getting more involved with. I think especially now there is a lot of excitement from US founders in the crypto space about just how impactful they can be in terms of lowering the barriers to entry for new startups in the crypto space to really be setting up in the US. And so we had a great reception and met with a lot of interesting people, and it was pretty exciting.
So some of those interesting people per public filings is that you spoke with the SEC about staking in ETFs as well as liquid staking.
We did.
Was that meeting productive? Like, what's the takeaway from that?
It was super productive. You know, the second that they announced there was going to be this crypto task force, we were interested in going in just to think about the issues that are pertinent to some of the technology that Jito has developed. And I think that Lucas and I both had a moment where we're like, are we walking into the SEC? You have the PTSD from the last 4 to 6 years. But it was a super productive meeting. There are obviously people at the SEC who have been learning about the technology in a deep way over the last I don't know how many years, but certainly over a number of years. And so there was a sort of nuanced discussion around ETPs, and Kyle Samani and Greg Exathalis from Multicoin Capital came as well, and so really got to be involved in the discussion on the ETP side. And then we dove deep into the technology behind liquid staking and the Jito liquid staking, our StakeNet solution. And there was a lot of discussion of how it differed from Lido, where there may have been points of centralization, how it may differ from other stake pools on Solana. So and there was talk about restaking. So it was pretty interesting how deeply nuanced the SEC staff who attended the meeting could go.
Is that a difference from the prior SEC regime in your view?
People really stopped going in around 2019, 2020, because you had the process where you'd go in and see FinHub and you thought you were going to engage in some productive discussions. And then soon after, companies were reporting getting subpoenas or other, inquiries from the SEC. So people really stopped engaging meaningfully. There were obviously other big companies like Coinbase, which has talked about how they publicly, wanted to engage with the SEC in a continued way. But tech companies were not going in, especially ones that were going to launch or had launched a token. So I can't really compare it to anything, but I can say that it was a meaningful discussion.
I was reading a piece lately that said that Coinbase through 2023 met more than 40 times with the SEC to answer questions before it got sued. So it feels like there were, the meetings that did happen under that prior regime didn't really go anywhere productive.
Yeah, and I feel like this actually, not just our meeting, but the general tenor from the crypto task force is that this is all leading to something. And even just anecdotally from other people who've spoken to the SEC, whether they've gone in or it's been reported that they've gone in officially, they all had productive meetings. And I think Commissioner Peirce's 10 priorities that she had laid out, I think on February 3rd or February 4th. It was like the day before we went in to see them, made it clear what her priorities were, one of which is staking. So I think there will be meaningful movement. What that means, whether it's guidance or no action relief or whatever, it remains to be seen. But I don't think these are meetings for meeting's sake. I think they are meetings with a goal in mind. How fast, these regulatory agencies can move obviously remains to be seen.
Mm-hmm. Cool. Well, yeah, we'll obviously be watching as those meetings continue to happen. But zooming out from there, I just want to start with your recent move to Jito. I believe you joined in mid-January.
Yeah.
And you were previously chief legal officer at Polygon Labs, before that Avara, aka Aave. So people were, I think, really interested when you made this jump, because you went from two Ethereum world, Ethereum adjacent companies to one of the really core infrastructure creators on Solana. So what led to that switch? And why are you moving from Ethereum land to Solana land?
Yeah, it wasn't an intentional move to say I'm moving from Ethereum to Solana, but for me, it was really about the team. And the team at Jito is one of the best I've ever seen in crypto, period. And I've been around for a long time. The culture is really, really unified, and everybody is really focused. It's a serious team with serious people, and everybody is performing whatever their task is to the best of their ability. I talked to them for a long time, met a lot of people, had a chance to spend time with everybody there, not just Lucas and Zano, but other of the engineers and ops people. And so honestly, it was just a cultural fit. And I think it was also for me, obviously there's an alignment on thinking about moving things forward from an open source perspective. I think Jito actually has helped to decentralize Solana in a number of different ways, which is something I care deeply about in the space, because I think decentralization differentiates everything we're doing from regular tech. And ultimately, I felt like I would be able to really help build, and they're at a very critical point in time building. So it was about that. I do see differences between Solana and Ethereum, but that wasn't the impetus for me moving.
Yeah, well, that's sort of what I wanted to ask is, from a legal perspective, how different is the job working at an Ethereum company versus a Solana company? Like, is the technology and the involvement of the foundation and that kind of thing substantively different enough that you feel like you have to perform the CLO role differently at Jito?
I don't think the separation and the differentiation between labs and foundation for Jito necessarily is emblematic or representative of how it is across the whole Solana ecosystem. I can't speak to that. I do think that for me, this feels much more like there are two businesses. One is foundation, one is labs. They are doing like what their core missions are, and maybe some less fuzziness or ambiguity around that. And I think the other thing that's really different in Solana land, and look, I'm new to this, so I'll say from being a month in, there is much more a view of this as a business, and it's okay that it's a business, right? Like, yes, we're building something new and it's different, but this is part of just building in the tech industry. And so I do feel a little bit more like I'm working just in like a tech company, and less in a crypto specific company. Obviously, knowing the tech and understanding the details, especially at the infra level, is really, really important here. And even in the first month I've been here, I've had detailed tech discussions around things we may need to do that have like legal or regulatory implications. But I think it does feel slightly different from that perspective.
Mm-hmm. Okay. So I want to nerd out for a little while just about some like policy legal stuff as it pertains to Solana. It's something I've covered a good bit in our Lightspeed newsletter, but we don't really get into very much on the podcast. So I just honestly, there's a lot of stuff that's been rolling around in my brain that I want to run past you.
Okay.
So I want to start with Gary Gensler. I've been seeing a couple of tweets after this, disastrous Javier Milei meme coin launch, basically saying we miss Gary, like we need him back. Probably in jest, but I also lived through this time where Gensler was public enemy number one, and I think sometimes things were blamed on him that were, I don't know, let's say like deeper problems. But he was kind of became a scapegoat. So I just want to do, like, as someone who lived through that time, worked in crypto through that time. On the legal side, I want to do a bit of a Gary Gensler post-mortem, shall we say.
Okay.
You know, he comes in pretty quickly after you have the FTX collapse. It's clear that there's political pressure to have some kind of big response, protect consumers better. I think that the consensus is that he miscalculated. And obviously, he really radicalized the crypto industry politically around Trump. What was Gensler's miscalculation? Like, how could that have gone better, in your view?
Yeah, I will say I don't think it was only FTX that fueled it. I do think his, reported alliance with Senator Warren, who is also a well-known crypto skeptic, I guess is the right way to put it, at least during the time period we're talking about, right? 2020 to 2024. I think that the miscalculation was going after legitimate businesses and not engaging in attempts for productive rulemaking versus what I think you're referring to is widespread, scams that may be going on in the space. And maybe he felt that was outside his jurisdiction. But I do think cracking down on the actual scams and the actual fraud that was going on, forget FTX. Like, okay, you missed that. Lots of people missed that too. But there's obviously been a lot of problematic conduct that could have been captured by the SEC in legitimate ways. And I think that the thought process behind it was like, let's be too clever by half, right? In terms of bringing cases against exchanges, but naming certain tokens as security, right? As securities, and not having the projects who launched or issued those tokens in there being able to defend it. Like those types of things, I think really, and the failure to really go after scams hard and go after legitimate businesses, I think was meant to cripple the industry to bring it to the, sort of types of activities we're seeing, right? Unfortunate activities we're seeing right now with the launch of like the Libra coin and things like that.
It also felt like there was maybe this belief at the SEC that if you close your eyes long enough, crypto will go away. Because it's not like there were hard answers on certain things. Like there wouldn't be a yes or a no on an IPO or something like that. It just got delayed forever. But clearly crypto didn't go away. And I think that was a bit of a miscalculation as well.
Yeah, I do think that there were thoughts in the US during the last administration that you could either ban crypto or, to your point, cripple it so badly and make it so clearly a scam that it would never continue to exist. And I will say Europe and other countries accepted the fact that you couldn't ban crypto really. Not every country, but certainly others. And so thought, okay, well, the thing we need to do is from the other Libra, right? The original Libra, there was a thought that we really need to do something because this is scary. And is it a replacement of money? And will it, undermine government control of the state and things like that? I do think if I had to bet, Gary Gensler is very happy seeing things like today's Libra happen because he's saying this is exactly what I told you was going on. They're all criminals. But my argument is no, he actually set it up. So that was the type of conduct that could continue to go on. Whereas, legitimate businesses like Coinbase and Kraken and even the, Solana Foundation, whatever it may be, where there were trying to be crackdowns on tokens and the like, sort of pushed people away from wanting to build real things, right? And now this narrative is like, we have to be building real things, making, apps with utility. It's like, well, a lot of us were talking about that for the last 2 years, but people who wanted to do that, a lot of them were too afraid to get into crypto at all because they thought getting an inquiry from the SEC was the cost of doing business. So I don't miss Gary Gensler. And I do put some modicum of blame on him for where we are on the unsavory parts of the ecosystem today.
Yeah, I think that's probably right. I think you can make the case that by trying to eliminate scams were actually more able to proliferate in a kind of paradoxical way.
I don't think he was trying to eliminate the scams. I think to your point, he was like, if I hobble the real businesses, maybe we'll never have to contend with crypto. And so that's where his focus was rather than on the scams.
Yeah. There's even the question of like, the Bitcoin ETFs took so long to be approved that the SEC's own Twitter account got hacked. So there's also just real downsides to the slow footing and everything. Yeah. Now for a quick word from today's sponsor. Celebrating 10 years of innovation, Ledger remains the most secure hardware wallet for your Solana and logins, trusted by 7 million users and securing 20% of the world's digital assets. In recent years, Ledger has built a robust ecosystem of products and services, making digital ownership more secure and accessible to everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, feature the world's first secure touchscreens, making it easier and safer to manage your Solana transactions and coins. With Ledger Live, you can seamlessly and securely manage and stake your SOL. Alongside Ledger Stacks and Ledger Flex, Ledger introduced the Ledger Security Key app, a safer alternative to traditional passwords, enhancing your overall digital security. Thank you to Ledger for making today's episode possible. Okay, let's get down to it. Is Solana a security, in your opinion?
SOL on its own?
Yes, unstaked vanilla SOL. Is it a security?
No, I don't think it is. And I'm very interested to see, and I don't know if this is, an indication we can take, but that the SEC has currently accepted the Grayscale and other requests for either conversion or for SOL ETFs. Unclear if that's some sort of representation that SOL is not a security. But I think if we're going to apply the Howey test, it's not a security. I also think that, and I know the Howey test is what we've all been living under, forget the last 4 years, but the last 6 to 8 years, because even under Jay Clayton, there was use of the Howey test. But I think we have to be thinking about where we really put these tokens from a market structure perspective. And that's getting a little bit into the congressional realm and out of just the plain SEC realm. But we're going to need to have new standards for what tokens are and are not securities going forward. And so SOL doesn't give you, rights relating to a business itself. It doesn't give you, dividends off a business itself. Maybe the transactions when SOL was used to raise capital back in the day, when there was, Solana Labs, pre-Anza and things like that, maybe those transactions are securities transactions, but free-flowing SOL existing today, I would say no, especially because that's fine that there's a Solana Foundation, but that's not what is driving the entire ecosystem by itself. I think it is pretty decentralized in many aspects.
Okay, so one of the real issues with SOL being deemed a security under the last administration was there was basically no venue in the US where you could legally sell crypto asset securities because there was this special purpose broker-dealer license that the SEC created, but it only gave like 2 of them out, and it was to places that have no customers, basically.
Right.
Say that under the new administration, in theory, the SEC were to say SOL or like maybe staked SOL as a security, but we're also going to allow like Robinhood and Coinbase to legally sell securities. How big of a problem is that? Or like, what are the considerations there?
Well, I'll say a couple things. I thought it was very interesting that in Commissioner Peirce's 10 policy priorities, she gave a little kick to the way the special purpose broker-dealer was used in the last administration, right? She said something like, we're going to find ways to use this where it's actually useful, right? Or can actually like service customers. I think that we will likely see a market structure set up that may consider allowing Coinbase and Coinbase to sell securities. I don't think that necessarily makes a difference for SOL one way or the other, unless everybody has to go through tests, right, to figure out which tokens are securities and which are not. But like, I think the SEC, even at the end of the last administration with that amended Binance complaint, said, we agree that the tokens by themselves are not securities. So we have a lot of work to do to figure out when these tokens can and can't be sold on non-SEC registered exchanges, if that makes sense. Like, I don't think it's as simple of a question as you're posing it to be, because I think, as I said earlier, we still have a lot of work to do to figure out, like, when is a token ever a security? If it has the features of an equity security or debt, a debt instrument or something, yes. But was it sold for capital raising or used for capital raising? Like, I don't know if it makes selling the token on an exchange a security. So complicated.
While we're on this, I guess, like, do you favor something that's been floated from time to time is basically crypto tokens are just outside of the historical legal structures we have for like investment contracts, and we need to come up with a new third thing that's not securities or commodities. Like, is that something you think is realistic or people should
No.
pursue?
No, I don't think so. I think we have to talk about the structures we know, because the structures we know work and will work for, in many ways, for tokens too. I think you just have to set the parameters for things that make sense. Like capital raising means different things in the crypto context. It doesn't just mean when you do, your initial capital raise. I think we have to consider whether capital raising means, selling tokens out of a treasury to keep your business afloat, right? Like, is that a form of capital raising? We should think through that, and whether there are any exceptions to that under the securities laws, which there may be. There are these things called like commercial paper exceptions and stuff like that, where you're like funding a business, but not through sales to investors and stuff. So we have a lot of work to do, but I don't think we need to create like a third new thing, if that makes sense.
Yeah. That is sort of where I fall on it as well. What about staking rewards? Because Solana ETFs have been acknowledged by the SEC now, but I do think that a big hurdle to those actually being adopted would be staking rewards, which recently are like above 10%. So you have a really big kind of opportunity cost if you buy an ETF that doesn't have staking rewards in it. So what's your take on whether those should be defined as securities?
Yeah. So I think the question is twofold, which is a liquid staking token or some sort of, derivative off of SOL a security? I think that has to be, I hate this term. I have such PTSD from this term, but that has to be done on a facts and circumstances basis, because something like Jito Sol and StakeNet look really different than other centralized, stake pools on Solana. Same with like a Lido, which definitely has some centralized, system of delegating stake and stuff like that. So you have to do a true facts and circumstances test on that. Whether you will allow staking in ETFs or ETPs is something obviously we talked about with the SEC. I don't think it's fully off the table, but I think we still have a long way to go, because we still have other ETPs that are going to be approved likely before we see like even an ETH staking ETP, and the issues around that probably are not that fun for a podcast, right? Because it's about like, what percentage can you do and redemptions, and is there like variance, which you can't have in these types of trusts. So there are like really nuanced issues deep in the weeds of the various ETF and security statutes that go to whether and how staking would work. So it'll work. I think there is some consensus around that. There are also tax issues and how you treat it. So it's a whole other thing. But like staking rewards in ETPs, probably going to happen. Lots to do on that. Whether these individual representations of staked SOL or securities or staked Ether securities is, again, like facts and circumstances.
Okay. And I would think that, the liquid staking token question would matter a lot at Jito, because Jito Sol is like a big product. It's the largest liquid staking token on Solana currently, at least until Binance, eats the whole market. But like what are I think it's worth just getting into that a little bit. Like, why, in your view, is Jito Sol not a security, and how does StakeNet sort of play into that?
Yeah, I mean, I think StakeNet is the huge reason behind why Jito Sol would not be an investment contract or any other, fall under any other type of security definition from the securities laws, because there isn't a point of centralization, right? StakeNet, makes it work autonomously and automatically. There is an algorithm. All the information is transparent and on chain. And I think that is a real differentiator from a lot of centralized stake pools where there is subjective decision-making around which validators get stake. I think, a lot, I can go into like much greater detail, but I think when you think just about how StakeNet works, it's highly differentiated. And maybe honestly, why it has such large stake and why it's the largest liquid staking token on Solana, because I think if you think about the ethos of what we're all building, it's so that there aren't centralized actors in the same way, that you don't have to have trust in the same way. And that's what the securities laws were actually built for in the first place, right? Like, if you have to trust someone, you need laws so that you know what to expect from these third parties, so people aren't making these just like third party subjective intent decisions and stuff like that. And StakeNet eliminates the need to even have to think about that.
Mm-hmm. And I guess for listeners who are less familiar, my understanding of StakeNet is if you buy Jito Sol, you get a tokenized claim to rewards from the Jito stake pool. And StakeNet is a way of like autonomously just figuring out how those rewards should be distributed, whereas some other LST providers will have like centralized people who basically, based on trust, dole out staking rewards to LST holders.
Yeah, so I'll zoom out and do the 30,000 foot view, right? So
Sure.
Solana staking looks different than ETH staking because you have this generalized staking contract that people can use, right? That's like from, I guess, Solana Labs back in the day. I don't know who actually created it, but I think that's who did. And so you have something like over 150 stake pools total on Solana, where everyone uses generalized staking contract. And it makes sense from because Solana is delegated proof of stake versus proof of stake. So you want there to be a lot more delegation in the system. So that's what these stake pools were actually meant for. So the Jito stake pool uses the generalized staking contract, as does everybody else. Now, I can create a stake pool and decide, okay, everyone's going to send their SOL to me, and I'm going to decide which 10 validators, 1,000 validators, whatever it is. And maybe I'll publish my criteria by which I use them. Maybe it's just going to be my friends and you and anybody else who delegates to the Rebecca stake pool on Solana will just have to trust me, bro, right? That it's going to work out. And that somehow I'll generate extra rewards. And so you are relying on my efforts and my subjective intent. And so do you need the securities laws around that? I don't know, but I think since there is a trust mechanism, you need something around that. So the Jito stake pool works totally differently. You delegate to the Jito stake pool. StakeNet is the administrator of the entire stake pool and of the Jito stake pool, and has this objective criteria, which is published, open source. All the StakeNet code is open source, and thus exactly what's going to happen. So there's no trust me, bro. The code's been audited. You can look at it in real time, and it's also any changes to StakeNet have to go through the DAO, and there are something like 60,000 unique wallets holding JTO, which is the governance token for the Jito DAO. So it looks a lot more like what we talk about when we talk about like a blockchain system, a blockchain crypto decentralized system. So I do think it's different.
Yeah, it's a cool product. Last thing I want to ask you about just on the SEC in general is, from people I talk to in the industry, I get the sense that the SEC really wants to reset relations with the crypto industry right now. It wants to signal that we're not the old SEC, we're friendlier, we're going to work with you, so on and so forth. Mm-hmm. Obviously, there's certain things the SEC could do that would take a lot of time. So like figuring out, a more like a standard that you can actually grasp for what securities are and aren't. Like that seems to me like it'll take some time. I'm curious in the shorter term, what are just some easy buckets that the SEC can enact in the next couple months that would, I don't know, like help provide more clarity or a friendlier environment for crypto?
Yeah, I mean, I'll go off of what I think some of Commissioner Peirce's priority list was, but I think that there can be guidance on custodial versus non-custodial staking. That would be really helpful. I think that whether they approve new ETPs on certain types of assets, of crypto assets, new ones, will go really far. I know there has been, and this is sort of public, so I'm not disclosing anything I shouldn't, like there's talk about whether there will be a revival of Commissioner Peirce's proposed safe harbor from a number of years ago with maybe updates to reflect where the industry is today. So I do think there will be quick, easy wins. And I think, as you said, like they really do want to show that, there's been a 180 and that you can come in and talk to them now. And coming in to talk to them doesn't mean come in and register. It means let's actually put something together that makes sense and allows for innovation in the United States. And look, I think to go back to your first question, that's why Lucas was, really thought the time in DC was productive. And I don't want to speak too much for him, but it was that there is this resetting and will allow for more companies to build in the US. So.
Mm-hmm. Yeah. Let's talk a little just about like policy then. So more on the congressional level. I don't know what do you think should be the direction that crypto policy generally takes? It feels like something that's been burning in the background for some time, and there's like a stablecoin bill that gets delayed or whatever. But like, just starting at the 30,000 foot level, what direction should crypto policy take from here?
Yeah, I mean, I think I'll say two things. I think we know the policy or that both the David Sachs and Bo Hines and everybody sort of talked about a few weeks ago at the big press conference, where it's stablecoins first, market structure next. And I agree that at least depending on how market structure plays out, that can make a lot of sense, right? It goes to the question that you asked, which is, do we need a third regulator, or can we split this up between the SEC and the CFTC in some way that makes sense? I think that you can, but that will be hard and take a lot of time. We have FIT as a basis. I think there are things that need to be updated or changed in FIT that don't necessarily work from a long-term perspective, especially around how we think about decentralization. But the one thing that I think we really need to do in this space is have some consensus or some thoughts on when people with certain levels of control need to have new regulatory obligations. That does not mean you have to register with the SEC or the CFTC, but I think it goes to, if you have insider information, if you are, the sole holder of a multisig, you're on a one of one or a one of two and you hold both keys or something, like, or you even hold all the keys, but like, there are levels of control, and we need to think about how that works in the industry while also incentivizing good consumer protection behavior, right? Like, sometimes holding an admin key for a period of time is really important. So you make sure the tech works the way it's supposed to. Then you can burn it, relinquish it, send it to the DAO, whatever. So you don't want to disincentivize that. But if someone's holding an emergency multi-sig for, the next however long, the rest of time, there should be disclosures around that, even if you don't say who it is. And you should know what those people can and can't do. And there should be some sort of like public attestation or something, right? Like, this goes to the trust question. And so there are areas of trust in crypto, and we need to understand what that looks like to make sure the system, one, can be built well, two, can be built differently than everything we've seen in like fintech and, Web 2 tech or whatever. And three, so can protect users so more and more people end up using this.
I want to zoom in a bit on the question of protecting users, because I think something that gets lost in the shuffle with all of the consternation about the SEC and so forth is that, like, having securities regulators is actually a good and important thing to have healthy capital markets. And it's kind of the strength of the US that, you can do business here and that you will be protected if, you get like completely screwed over somehow. So are you concerned that there could be an overcorrection where, like, under a Trump administration, there's too permissive of an attitude towards crypto, and you have high-profile meme coin launches and so forth that kind of damage crypto's reputation outside of the existing crypto world?
I'm not sure our reputation can be harmed much more than it has been, quite frankly, in terms of how normies view crypto. I think maybe we're trending towards some more positivity and obviously more adoption. But I don't know if I think I think we're particularly sensitive to these meme coin launches that have, small subsets of actors who are engaging in really unsavory conduct that do hurt retail. But I think that, one, there are enough people who are close to the administration that we are going to see market structure. We just know that that is a priority. And so hopefully that will put guardrails around things, and that it will create the right barriers to entry, right? Where people are like, I want to build a legitimate business. And so I will build either around these or in compliance with these, depending on what I'm building in particular. And so I'm not that worried. I don't think between now and, 6 months from now, these meme coin launches are going to deter anyone from wanting to put market structure in place. They may just actually put in market structure that corrects for this. So, if anybody wants things to stop, one hopes that the market structure bills will do that. And I think we've seen a lot in the days post Libra launch on crypto Twitter saying like, great, now it's time to take out the trash and purge everybody. And I hope that's what we do. We've needed that for a long time. The implosion of FTX did not get rid of everybody who wasn't a serious builder here. And I think that's what, the people who want to see this place, see crypto flourish in the US, really be filled with, is real builders.
There was maybe a sense after Trump himself launched a meme coin that anything goes now. And I think that's how you ended up with Libra, which was, as we talked about in a different episode of this podcast, just incredibly brazen. Like, it was doing some of the slimy things that people don't like about meme coins, but very openly, like insider traded and, pay to play and so forth. So yeah, I guess, like in many cases, if you're in crypto, you take the good and the bad with the new administration, and there's likely to be a bit of chaos. But then I guess you hope that just the people that are working on this crypto summit or whatever are also going to, help enable more legitimate use cases.
There's just, without getting too much into the details, I can say there are a lot of people working to get market structure right as fast as humanly possible, both on the industry side and on the policy side. So, if anybody is worried about, other practices in the space, in addition to these bad meme coin launches, hopefully we'll see the overcorrection in the actual laws versus in unofficial policies through regulators. To go back to your Gary Gensler question.
Yeah. What do you think about, there's been some reporting that there's no longer going to be a crypto council. There's going to be a crypto summit, maybe in part because of the fractiousness of the crypto world and the tribalism between ecosystems. And I think also just some disclosure rules and stuff. But I don't know, does that seem like that matters as a news story? Does it matter how the Stacks group is structured?
No, but it's not just going to be one crypto summit. It's going to be it sounds like lots of mini crypto summits on different issues, which I think will be really helpful and allow a lot of different industry participants to have a voice, which honestly is really consistent with what the industry has been asking for, right? People felt like there were lots of backroom deals, right? When we think about the original FTX bill, the DCCPA, people thought that, it was one or two players in a back room, and people have felt like that throughout time. So I think actually mini summits will allow for this greater openness and transparency and participation, which is, one, consistent with, the ethos of crypto, and two, will really be helpful from a long-term perspective and people feeling heard, which honestly, in getting to consensus, is one of the most important things, is people just feeling like they were heard. So I actually think it's a positive development, and probably, I don't know if it's from the tribalism or whatever, but I think it was hard to pare down who would be on, just given who was so supportive of, the new administration coming in and all the various different aspects of fair shake and things like that in DC. So this is probably a very productive solution that actually will eliminate some sort of bottleneck, honestly.
Now for a quick word from today's sponsors. Today's episode is brought to you by TurboTax Calculator. Accurate crypto taxes, no guesswork. Get accurate CPA-endorsed tax reports with full support for IRS rules. With more than 3,000 integrations, TurboTax Calculator supports all of your wallets, exchanges, and on-chain activity. And you can import directly to TurboTax or H&R Block, or share securely with your accountant. You can use our exclusive discount code BW2025 to enjoy 30% off all paid CryptoTax calculator plans. That's BW2025 for 30% off. Celebrating 10 years of innovation, Ledger remains the most secure hardware wallet for your Solana and logins, trusted by 7 million users and securing 20% of the world's digital assets. In recent years, Ledger has built a robust ecosystem of products and services, making digital ownership more secure and accessible to everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, feature the world's first secure touchscreens, making it easier and safer to manage your Solana transactions and coins. With Ledger Live, you can seamlessly and securely manage and stake your SOL. Alongside Ledger Stacks and Ledger Flex, Ledger introduced the Ledger Security Key app, a safer alternative to traditional passwords, enhancing your overall digital security. Thank you to Ledger for making today's episode possible. And then, I have to ask as well, what do you think of a potential strategic Bitcoin and maybe other coins reserve?
So look, I think first of all, there's a big difference between what a strategic Bitcoin reserve is and now I'm blanking on the word stockpile that they used in the EO. Those are two totally different things. I will say, I think any consideration of a strategic Bitcoin reserve should be slow and should have deep economic analysis around it to ensure that it actually can accomplish whatever the purpose of it is, whether it is somehow being able to undercut any deficit that there may be, or somehow create long-term revenue for the United States. So we have to think about what the real purpose of it is. Like, I don't know if I'm facially opposed to it, but I think we need to have real economic analysis behind it to make sure it matches whatever the purpose of it will be, which is totally different from a stockpile, right? The stockpile is, we've actually seized a bunch of crypto assets in all the cases that the DOJ has pursued over time. And can we appropriate those and use those for the purposes of the United States? And I think that there may be some constitutional issues around that have to be looked at before that can be brought forward. But I don't know.
That's interesting. I actually didn't register that difference, and it's a pretty significant one actually between a stockpile and a reserve.
Yeah, it is.
I guess one other thing I'm just curious on this policy question is at Jito, one of its biggest calling cards is creating kind of MEV, maximal extractable value tech for Solana. This is something that can be a common critique of Jito and Solana, is that there is a lot of quote unquote MEV, which doesn't always necessarily separate good from bad MEV. Yeah. But when you look at things like sandwich attacking, which is like front running and back running user trades to kind of give them worse prices, like that would not be allowed in traditional US financial markets. So what are some of the considerations around MEV and how do you think about it?
Yeah, great question. So I'll say the thing, especially just to go back to the moving from the Ethereum to the Solana world, that people have just been calling MEV sandwiching in Solana, and it doesn't, distinguish between certain types of MEV that may not be malicious and may actually be efficient or create market efficiencies versus sandwich attacks, like you said, which I would argue are probably illegal under the laws as we have them today, because they may be seen as market manipulation, depending. And we even have that interesting, I don't know if everybody remembers it or has seen it, MEV complaint out of the Eastern District of New York that really talks about these, I think brothers maybe, but these guys who created. Yeah. Do you remember what I'm talking about? I can't remember the name now, but and it's a really well done complaint. I think they had good industry people sort of as consultants helping them write out the MEV. So I think that bad MEV is probably illegal as it is today and just not being prosecuted in the ways that it is in the Eastern District one, because it wasn't as widespread and probably poorly executed as that one. But I do think, and I think everybody acknowledges this in Solana land, we need a solution to MEV generally. I think that we'll see a lot of different approaches to this coming out maybe in the next 6 to 9 months. But the one thing you can say is, maybe there's a little sniping at each other in the Solana world, but when there's a problem, I feel like everybody comes together to try to solve it together. And look, Ethereum had its own MEV problems for a while, and we've seen a lot of different solutions coming forward, like BuilderNet from Flashbots and some others. So I think we'll see a lot of those kinds of developments in the Solana world too. I mean, Solana's younger than Ethereum as well, and so not all the same problems have been solved, but I think they will be. And I'm excited to see and work on these issues too. It's another reason why I was excited to come to Jito, which is I think they're working on some of the hardest issues in the space that require both tech solutions and regulatory solutions. And so it's really fun to sort of be creative on that side too.
I'll be interested to see how the MEV question sort of develops from a policy stance, because it's hard to grasp a little bit, and the term is almost too inexact to be used. Like I don't know, there maybe needs to be a better term for MEV.
There should be a better term, but I will say crypto is just like notoriously bad at using words, like to just conflate everything and make it harder on ourselves. Like wallets are not wallets. Like that's really a problem. Like platform, I don't know what that means. Like, is it the protocol? Is it the protocol plus the front end, right? So like some of the stable coins, when you're talking about algorithmic stable coins, probably not what we should be using. But so MEV, definitely we need to change that. And look, I'll say I've already had conversations prior to even contemplating coming to Jito, but when I was back at Polygon on MEV with European regulators, with UK regulators, I think there may be some regulators or regulatory bodies in the US who maybe understand it, but like, I just don't think that's the first thing to tackle, right? Like we have to get to like, what are these tokens and how do we regulate them? And so I think we're lucky from the perspective that we have an opportunity right now where we can try to solve this before somebody comes in, whether it be the institutions, once they realize what this is and what kind of opportunities they're missing out in, and tries to, I think, pigeonhole us or somehow hamper the industry in a certain way, or it's the regulators who say this is bad and we're cutting down on all of it. So look, a regulator once said to me, one of the things that TradFi is good at, and they're not good at a lot of things, is recognizing a problem and coming up with a solution and implementing it and like handing the attendant regulation or laws over to the regulators to claim as their own. And so I think hopefully we can focus right now on coming up with the solutions that will not force our hand on some very draconian like regulatory solution.
I want to go just a little more into quote unquote crime season. And this is maybe a little myopic on my part.
I was waiting for this.
Because, yesterday and over the weekend is just like some of the most insane, anything can happen kind of hours that I've experienced recently in crypto. Always a fun day to be in news. There was a CoinDesk report from Danny Nelson yesterday that like this Hayden guy who's behind the Millet coin said he was implying that he has basically bought off the Argentinian president, which is really crazy. And there's a lot of things you can say with the whole crime season, meme coin craze, laissez-faire kind of attitude. But what I want to ask you is, like, as a lawyer, as someone who cares about laws and people following them, where does the buck stop? Like, whose responsibility is it to prevent really extractive things in crypto? Is it the social layer, or should it be regulators that are doing that?
Well, if you're an actor in the space and you are engaged in market manipulation, there are laws that already prevent that. Like there was a time around mango markets where there was this discussion, right, of like, I don't know, strategically profitable trades. Remember when he was talking about when Avi was like tweeting about
highly
that?
Profitable trading strategy.
Yeah, exactly. And I was like, and I think I tweeted about it, like this highly profitable trading strategy is actually like, regulated by existing laws. And lo and behold, obviously it was like, so we have laws already. And I would not be surprised if we see like actual cases against people who've decided to, go on podcasts and talk about their crimes very publicly. So, where does it stop? I mean, like there are laws that prevent these kinds of things from happening already. I don't think just because we're in crypto and people feel like laws may not apply that they don't, like they do. And so I do hope we see cases against people who have openly and transparently admitted to committing crimes. And I think there's actually a huge positive a benefit to the social layer in crypto because people will call it out. And because crypto is so transparent, notwithstanding these kinds, I mean, in TradFi, you'd never have somebody getting on a podcast talking about the crimes they committed. And you'd never have people who knew so-and-so who knew so-and-so outing somebody on X. And so the social layer actually does provide a great benefit because it actually almost like forces the bad behavior to the surface faster than you'd ever see it in the traditional world. So props to the social layer for sure. And I hope that the laws get enforced as they should because people broke laws here.
Do you think that crypto has a unique issue with law breaking? Because I'm a little bit of two minds on this. I'll say, like, I think one of the responses you'll see is, oh, well, every industry has scammers. Bernie Madoff is a person who exists. But at the same time, like the sheer velocity of crimes, if you will, like you could spin up a meme coin in 2 days, get someone to tweet about it, and then extract a ton of value, which maybe in other industries it's hard to profit so much so quickly, so the temptation is just like a lot higher. So do you think it's a unique problem, or do you buy the kind of every industry has its bad apples sort of logic?
Maybe there's some slight bad momentum here, but I'd put it in the single digit percentage wise versus other industries. I think the difference here is the social layer. You don't have like drug cartel Twitter. Do you know what I mean? Like where they're all tweeting about what everybody is doing. So crypto Twitter and the social layer does provide this unique, when you're talking about velocity, like velocity of information, that's totally different than what you'd see where there's crimes in other places. And so the transparency is both good and bad. But when you talk to law enforcement who understands crypto, they say it does benefit them. Now they need other law enforcement kinds of tools and other types of legislation to be able to utilize the speed with which they're able to recognize crimes. But like there's a positive and a negative here. But as far as like, is there more crime in crypto? Like, again, I'd say maybe slightly, but not too much. But we just see it so much more because the social layer is like constant.
There's also this fact that like blockchains are public that I, in a weird way, I think doesn't get talked about enough. Like, crypto is good for things like money laundering because you can get away from the banking system, but it's bad for things like money laundering because everyone can see what you did publicly. So every rose has its thorn, I guess, if you're a criminal.
Yeah, I mean, look, having written a paper on illicit finance in decentralized blockchain systems, and then spent a year speaking to law enforcement and policy about that paper, I don't think blockchain is good for illicit finance. Like, it's just not where you want to be committing your crimes. Like, if you actually look at, I mean, think about the TD Bank settlement, the illicit finance and like the actual sanctions violations and the violations of the BSA were going on at TD Bank on a massive scale for like well over a decade before they did anything about it. And that is like where you have the transparency of the Bank Secrecy Act versus taking down exactly who was engaged in this Libra, scandal in 2 or 3 days. Like, sorry, I think I would take that over 12 years of massive bank fraud. So
yeah, the one thing that gives me pause as I've processed the Libra stuff a little bit is there seemed to be some kind of involvement from Meteora, which is a DEX on Solana that's like linked to Jupiter, and it's like I can't claim to know what happened, and it's unclear. But the Meteora CEO has stepped aside, and he seemed to be doing some kind of business with Hayden, the Kelsier Ventures CEO, and that is concerning because it's not like there's like a crime sector and a DeFi sector. Like they were working together in this case. And I think probably if crypto wants to be treated more legitimately and regulated more legitimately, it needs to separate those like actors from each other a little better. There maybe needs to be gatekeeping, you could say.
So, I would say what probably there is more of and harder to differentiate versus is there more crime is just like, who should you actually be associating with in this industry? Like, who are real builders, right? And you can see this because people sort of very much got rich quick, not just during the ICO craze, but like even around DeFi summer and stuff like that. And so you have people who've been successful or know successful people or have good connections, and you think they may be legitimate actors. And so you don't pay attention to the red flags. And so I do think we have more of like ignoring red flags in crypto. And so good associating with like not good or shady people, and not always trusting your gut where like that sounds wrong, right? So I think we do have more of that. And I agree with you. Like I am very hopeful that we've reached, another sort of crescendo of like, God, we don't want this here. And we start purging those people and paying attention to those red flags.
Mm-hmm. Yeah. The place I want to end, Rebecca, is just talking a little bit about like why DeFi matters and sort of what the future for it may be. I think something that's interesting in your job history and the writing you've done and so forth is that you really care about DeFi. Like there's a lot of people who are into crypto, but it's like stable coins is the extent. It's very understandable. It is kind of limited in what it does, you could argue. But like, why do you personally care about DeFi? Why is DeFi important?
Yeah, I mean, look, I think DeFi is maybe in addition to stablecoins or at the same level, the most important advent or innovation we've had in the blockchain space, because not just this idea that we can democratize finance, but I think having personal autonomy over your own assets in a way that we just don't have in the system is the one thing that will open up our economy and let people participate. I came from a really small town in the Midwest, and just having been around the Midwest and seeing farmers and things like that, like this can open up opportunities in a way that otherwise wouldn't exist. And I just honestly, for lack of anything, I think it's really cool. Like, what an amazing invention that we can decentralize a way that a lot of our economic interactions work. And I think it'll change how the social layer generally works too. If you and like, we're not going to get rid of banks. I don't believe DeFi is going to replace our entire financial system. So that's not why I'm into it. But I think it's going to change how people relate. And like, originally I went to law school because I thought the way international relations was going to change was through the way international contracts was built out. I took like one class of international law and realized like, no, that's not what's going to happen. But I do think this is going to change how we relate to each other in the world. And so I do hope it sort of produces a better system and allows more people to participate than it could in the first place. So that's why I care about DeFi.
Okay. And then the last question I have for you is just from a legal perspective, what's the most important thing that needs to be done to allow DeFi to flourish, in 2025 and beyond?
Yeah, I am really happy you asked. And I think there is getting to be industry consensus around this. So I'm like, this is a great place to end. We have to define when there is control that matters and when there's not. And I know we've sort of threaded it through this podcast a little bit and talking about like control and trust and stuff like that. But like the whole beauty of DeFi is that it can be trustless. And so we have to define when there is control and when there is not control in a, decentralized system or in a permissionless system, so that we know when something's actually DeFi versus not. And I'm excited because I think, my co-authors and I wrote about this concept in the paper we put out a year ago. And I think there's been a lot of talk about it from people on crypto Twitter and elsewhere now, that the control issue is sort of the most important. And I'm hoping that we'll come to consensus around that and, watch DeFi really flourish after that.
Good stuff. Well,
yeah.
We will end it there. But Rebecca, thank you so much for coming on the show. Congratulations on the new role at Jito. And yeah, we'll be really interested to see where things develop, and best of luck to you.
Thanks so much for having me. It was fun to have chat.
Yeah. All right. Take care.